Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. Today, we want to talk foreign update with Calibre Mining, the fantastic gold producer out of Nicaragua and Nevada. And with us here is Ryan King, the Senior Vice President, Development and Investor Relations. And also, for the first time, Tom Gallo, the Senior Vice President for Growth. Hey, welcome, gentlemen. How are you guys?
Awesome. Thanks for having us.
Yeah, excellent. Fantastic. Yeah, great to have you here on the show here today. And I must say, outstanding drill results. We want to talk about that in a second, because before we start to talk about those results, and really I've seldom seen results like this, that is great. You have provided a multi-year, grade-driven increasing production outlook. Ryan, please elaborate a bit, because that looks outstanding.
Yeah, I mean, thanks, Johan. And as your audience knows, we've got a unique situation, right? In Calibre, we've got excess mill capacity. We've got the two mills, Limón and Libertad. And since acquiring these assets, and I think it's really important to note that since acquiring these assets, when we acquired them, there was about 280,000 ounces of reserves. Now, over the years, we've been investing into the assets. And today, at the end of 2021, we've got over 1 million ounces of reserves after producing 350,000 ounces of gold over those last couple of years. But the grade has been increasing year over year in our reserves. So we're up to 4.6 grams per ton gold in reserves, and this has been something we've been working on for a while. So we've been talking about a grade-driven production increase in some of our news releases and narratives over the last little while. And finally, we decided to come out with a production outlook that really does demonstrate this grade-driven increase. And you can see, this year we're guiding 220 to 235,000 ounces, of course, with the addition of the Nevada assets that we acquired from Fiore Gold. But what's exciting for us is that volumes will largely stay the same. And then we're seeing this grade-driven production increase in 2023, going to about 250 to 275,000 ounces in that range. And then in 2024, going to 275 to 300,000 ounces of gold based on what we have today and what we know today that's in our reserved back outlook. So it's really exciting to see. And really what we're going to see here is that should lead to a lower operating costs, so lower all-in sustaining costs per ounce, because the volumes are staying the same, but the grade is increasing.
Absolutely. And I think you also have some extra capacity with 1 million tons per year, right, at your mill, so you must not invest a lot of money to do all the things, right?
Well, this is the unique situation, and really the value opportunity for Calibre is that, we've discovered and we're developing new satellite pits that can feed into existing, already paid for infrastructure. And in fact, one of those mills, the Libertad mill, has over 1 million tons of annual capacity that can be that we can process additional ores. So when we look at our outlook that we've given, it doesn't include this additional 1 million tons of capacity. So that's the really unique situation, because it's very low cost for us to develop these new pits and then haul the material to the facility. The facilities don't require any additional capital.
Fantastic. So, Tom, question for you. I mean, Ryan laid it out, and you guys are really on the growth path, as you are the Senior Vice President for Growth. I mean, when I look at those drill results, 66 grams gold over 5.6 meters. That is outstanding. And also the other results, 30 grams, 22.5, 17.5. And they are much, much higher than your 7.17 grams reserve grade. So it looks like you have not only, let's say, the growth here in front of you, but also those grades are crazy, right?
Yeah, no, thanks. They're excellent. And that 7 gram reserve grade is specific to the Pantheon deposit, of which, we're drilling the extensions of. So we've included in our press release that we put out yesterday this nice VTEM map that we'll throw up onto the screen. And really what this does, this is the first time we've ever done something like this and had a look at the district using VTEM technology. And what we see on this map is are two trends that extend to the northeast. that basically go for about 6 kilometers each. So you've got the trend where the historic Santa Pancha mine, which produces 1.3 million ounces, sits, and that trends to the northeast. And then where we're at right now at Pantheon Shaft 9, where these drill results that you spoke of, these high-grade 66 gram per ton and such drill results come from. Another trend there as well, extending to the northeast. So as Ryan kind of laid out, as you alluded to, we're sitting there with excess milling capacity, very little incremental capital to potentially bring something like this into production. Now, this Pantheon Shaft 9 deposit that we're talking about currently does not sit within resource, and then by definition, therefore, cannot sit within reserve. And then, as Ryan alluded to, is not included in that multi-year outlook, which tops out at 300,000 ounces in 2024. So we're really excited about the potential to grow not only this district from a resource perspective, but quickly advance something like this potentially into a production scenario for that very little incremental capital.
Mm-hmm. And you said you have 6 kilometers strike to both sides. I mean, how much was that what you have drilled so far then?
A very small amount. If you see that map, you see where Santa Pancha sits. It sits over maybe just less than 2 kilometers on one of the trends. And again, that contained 1.3 million ounces. And that's from about surface down to 200 or so meters below surface. Wow. So there's a ton of strike potential, but there's also a ton of down dip potential. So, right now we've got 2 drills at the Pantheon Shaft 9 target, delineating what we've released, looking to get something that we can hopefully declare a resource on by the end of the year. But we've now just brought in and mobilized another rig to start to test some of these distal targets. This target area, these corridors really just came to light here over the last few weeks as we've got results back from that VTEM survey that we just spoke about. And we're combining that with doing some, boots on the ground, real-time field work. And that's outlining some targets that are, going to be sort of major hundreds of meters or kilometer scale step outs along these trends. So stay tuned for more exciting things to come from that zone.
Okay, super. How does it look like then with the infrastructure in those zones? I mean, do you need to build still roads, or is it, let's say, easy to set up a new open pit there?
Well, so the benefit here is this is sort of within the mine site area at the historic and continually producing Limón complex. So right now we are mining underground at Pantheon. And so Pantheon Shaft 9 is an extension. The furthest extent of the zone is about 1 kilometer away from where we're actively mining, but we could get into the zone sooner than that. And so, this would be an underground access at this point. As far as, open pit mineralization, we're too early days. We don't have anything drilled along that trend yet that would give us, indication that it would be a surface operation or an underground operation. But needless to say, access is, it's very good. You drive right through the mine gate. It's all paved roads to the gate, and there's it's an active site. So activities, moving things around, things like that, very, very accessible.
And just to layer on just a little bit, Johan, is that the operation here, based on that VTEM map, the mill is actually located down to the southwest of Pozo Bono. Right on the map, you'll see something called Pozo Bono, which is an open pit resource area. And you can see along that contact, Pozo Bono, Limón Central, where we have an active open pit, that's over 850,000 ounces of gold along that trend as well. And you can see that distinctly on the VTEM. So the mill is there beside it, and we fill that mill on an annual basis now with the material that we have now. And what Tom's talking about, Pantheon Shaft 9, Pantheon North, that is all new. It's not in resource. And we see a similar trend that goes for multiple kilometers up to the northeast. So it's a very exciting opportunity for us.
So that means like a multi-year production at 300,000 ounces should be easily doable.
Well, it's definitely the good potential for us, right? Today we've got reserved back multi-year outlook. And what we see in front of us and what we've announced already is very high-grade drill results. And we see the trend that has the potential to extend multi-kilometers. And when we look at Limón, the property, the mine itself, it's been producing for decades. It's produced over 3.5 million ounces of gold. So when you look at low sulfidation epithermal vein systems, you look at the resources and reserves we have on the property today, coupled with the past production, we're talking about a world-class low sulfidation district here. And it looks very prospective to discover and expand resources from where we are today.
Fantastic. Let's come shortly to Nevada, because I have the feeling that is also not really included in this calculation, right? I mean, you have the Gold Rock project on the one hand, the Pan mine is producing, but my feeling is the Pan mine still has also several years potential to produce, honestly, yeah, because I think that the last three results I have in mind from Fiore, they were really good. They were higher grade also. So what's your view on that?
So I'll just give an overview, and then Tom can get into some of the details. But yeah, no, one of the opportunities we saw when we acquired Fiore was all the exploration potential, right? You know, when we look at what the team has done, and they've done a very good job, being very fiscally responsible, investing their smaller amounts of operating cash flow back into the business. But when we look at Pan, you know, at Pan, their operating heap leach mine, it's only seen about $1 million to $1.5 million of exploration over the last 4 years into the Pan existing resources and some of the smaller areas around it. So this year we were significantly expanding that investment back into Pan, and we've announced a number of drill results. I think in total this year, Tom, we're going to be doing about $9 million.
That's the investment that'll cover over 50,000 meters of drilling, which, you know, will help bolster that overall resource base. And, you know, as you alluded to, several years in the reserve as it stood at the end of 2021, you know, but there was a much larger resource base underneath, so we needed to kind of infill that, get the confidence up, so we can, you know, take a longer term view on Pan. But you know, you also touched on Gold Rock, and it's important to note that the multi-year outlook that we put out, again peaking out at 300,000 ounces on the top end by 2024, does not include Gold Rock. So the focus this year is to de-risk the asset, if you will, get a higher confidence in the level of engineering required to make a construction decision. We look to declare a maiden reserve at that deposit by the end of this year for posted December 31, 2022. And that will allow us to make a decision, if you will, on the future of Gold Rock. But again, 300,000 ounces, not including any of the success we're having in Nicaragua, and then not including the Gold Rock project. And if you recall, there was a PEA out on the Gold Rock project for 2020, which foreshadowed, you know, north of 50,000 ounces a year. Now, you know, if you look at Pan at 45, you look at something north of 50, we're talking about the potential to have, you know, 100,000 ounces or thereabouts in Nevada as a complex. So that's, you know, that's an additional opportunity within the portfolio for, again, because we're not, you know, having to go out there and build a big mill, you know, big machinery. Capital will be relatively de minimis when you compare to some of these other big projects out there. So, you know, we're very comfortable with where we stand today with Gold Rock, and we look forward to updating the market as we progress our program this year.
Super. Yeah, I mean, the last number I have in mind was something like $50-60 million all in to build a production there. And maybe with inflation, it's a little bit more, but I could imagine that this is something that what you could do, let's say, over a time frame of 1.5 years, easily out of cash flow.
That's correct. And I mean, you know, we don't have a final number. You're right. You know, we've seen inflation across the board in this business. But again, just want to reiterate, this is a heap leach pad. You know, there'll be a gold plant associated, but the amount of actual physical infrastructure that's required is very small when you think of a mine that, you know, that has a big mill, big machines that spin and whir, those types of things. We don't have any of that. It would be effectively a carbon copy of what we see at Pan with a heap leach operation and you know, a gold plant to process the pregnant solution coming off the leach pad. So yeah, you know, sub $100 million would be a good temperature at this point for sure.
And of
Exactly.
course, you're right, Johan. We've got almost $80 million in cash.
Exactly.
We have no debt. We're generating significant amounts of operating cash flow that should increase year over year, of course, with the multi-year outlook increasing up to 25% by 2024 over 2022.
Yeah, and also I think with falling costs, and let's assume 250,000 ounces production per year, I mean, even at those gold prices around the 1800 level, you should easily do $100 to $150 million free cash flow.
Well, we're also investing a fair amount back into the business as well, right? We're investing in, when we look at Central America, we're investing in new satellite pits, so that all requires capital, new infrastructure at those sites. We're investing significantly back into the exploration as well, right? You look at this year, we're investing up to almost $42 million in exploration between Nicaragua and Nevada, which allows for the exciting opportunities to expand resources, sustain the business for long term, increase mine life, and make new discoveries, which is always very exciting for a commodity-based resource company.
Yeah.
Right. So indeed, we'll be generating significant amounts of operating cash. We will absolutely have some free cash flow, but we're investing back into the business as well.
Absolutely. And that's how it should be for the future. Fantastic. Super. Gentlemen, thank you very much for the update. I would say it all looks great. I know why I'm a shareholder of your company. Also, I have to disclose that, of course. And yeah, really like it. And I would say keep it going and go full throttle.
Thanks very much, Johan. Appreciate the time.
Super. Awesome. Thank you very much. Thank you. Yeah, ladies and gentlemen, that was Ryan King, Senior Vice President, Corporate Development and IR of Calibre Mining, and also Tom Gallo, the Senior Vice President, Growth for Calibre Mining. Yeah, you heard it. There's not so much to add, really, because it all looks fantastic. Sensational drill results, great satellite pits, great growth, plant growth, of course, up to 300,000 ounces by 2024. That really looks achievable to me, and also generating significant cash flows while they are really growing the company. This is also fantastic. And please don't forget, this is something what the Swiss and the German love. No debt and $77 million in the bank. This is how you make successful business. And to be honest, I just did a chart analysis by myself before this interview, and Calibre Mining is now in my buying range between $1 and $1.15 in the point and figure chart. So you should really consider this fantastic company. And also Haywood came out with a $3.50 target yesterday on the company. I fully sign that, because my target is also in the $3 range. You really should consider Calibre Mining. Thanks for watching us, and bye-bye from Switzerland.